Welcome back to the trailer park, folks. Man, Wall Street put us on a roller coaster ride this week, didn't they? Last week, they took all my gains from this year, and then man, this week, they tried to take all my gains from last year too. That's not any fun. Thank God for Friday, because at the end of business on Thursday, I was in the hole. Let's take a look at how bad it got. Put out a gravel road gains, the old road to $10,000. See where we're at. So as you can see, last week we were at 48.98, down only 0.5%, and down 23 bucks. Not that big a deal year to date. Ouch! This week down to $4,772. I'm down 5.3% year to date. Down 269 bucks. It's all right. You know what we do here at the trailer park. We buy the dips and then we watch them rip. That's how we handle it here. So let's take a look at the big dips of the week. Celsius, we had down 11%. AMD, this is my big dog. I've told y'all that before. This is the biggest position in my portfolio. And it was down 20% this week. It dropped 16% Wednesday after earnings. And that's something I don't understand. I don't get it. We're gonna go over 3 different stocks today that had earnings calls. And AMD, they did what they always do. They came in and they beat quarterly revenue. Up 34% year over year. Earnings per share jumped 40% year over year. The data center segment, what Lisa Sue's been talking about a lot, 39% up year over year. I mean, come on, y'all. Full year numbers, these were just the Q4 numbers, Q4 of 2025. The full year revenue numbers, 34% up year over year. Gross margin was at 52%. Earnings per share were up 26%. And the free cash flow, it doubled. So what in the world happened? Well, Lisa Sue did what she always does. She sandbags. She is, like we said before, she is the queen of undersell and overdeliver. And once again, she overdelivered on earnings, but then she went into guidance, and I saw people calling it underwhelming guidance. And so because of that, you know, everybody started selling off. I don't get it, but hey, I'll take it. It don't bother me. I'm not buying right now because it's already 13% of the portfolio, and I try not to contribute once it's gotten over 10%. That way I don't get too heavy weighted into anything. So we're just going to be holding it for now, letting it keep running. I was up like 105% on this stock. Ended up, I think right now we're still in the 80s. You know, I'm still 80 something percent up even after this drop. So if I didn't already have 10% locked into it, I probably would have bought more this week. That was a heck of a dip. So we also had Salesforce. It was down 14% for the week, and is now down 22% overall on the month. So that one's taking a beating. SoFi was down 20% for the week, and down 28% for the month. Once again, this is another one. They reported earnings. They reported banger earnings. Let's put this whiteboard back up here and take a look at some of the SoFi numbers. So For Q4 of 2024, they had their first ever quarter to hit $1 billion. That is an increase in revenue. Revenue was up 37% year over year. Full year revenue, 38% year over year. So, hitting $1 billion in a quarter was 37% year over year in the quarter, but then for the full year, 38% up. They added 1 million new members. And then they added on a whole bunch of features, things that you can add on, add-ons basically, new products for their customers to buy. So we got $1 million, or 1 million new customers, and y'all might hear the neighbor kids. It's been cold and icy here in Texas for weeks now, and we got a beautiful 60-degree day, and so everybody's outside enjoying this nice weather. So you might hear the kids playing, but hey, I enjoy the sound of happy kids. They're out there playing and not fighting and hollering. That's a wonderful thing. So like I said, they added 1 million new members in Q4. That's a new record. Total members now are up to 13.7 million. So new members grew 35% year over year. Profits, adjusted EBITDA came out 60% year over year up, 31% margins. Guidance, all right, Noto came out and said he expects net revenue to go up 30%, or EPS expecting an increase of 54% next year, and he even said through 2028 that they expect 40% earnings per share growth all the way through 2028. So y'all, with the dip, I kind of told y'all last week that if this thing was still really low when it came time to buy this week, that I was probably gonna get some more. So that's exactly what I did. I put in $60 this week, and I was able to buy it $19.33 per share. Good price, y'all. And I've already, I think I'm already back up 7-8% on it just since I made the buy. So, another side note. I was listening to the SoFi guy, Stealth Wealth Kevin, I think his name is. And he was giving a big speech about SoFi, which he is the SoFi guy. And he was telling me that, you've got to become an expert on banking, and you need to be listening to every single conference call, front to back. And well, I tell you what, and a lot of these guys say that, but man, they're full-time YouTubers, they're full-time investors. I work 45, 50 hours a week. My commute back and forth to work eats up another 7, 8 hours a week. I don't have time to listen to every conference call on every stock I own. Maybe I should. Maybe that's bad on me, but I think there's a lot of y'all out there that are kind of in that same boat. So what do? I read the Cliff Notes and I do the best I can. I know the points that I'm looking for. I go in, I ask Grok, get the highlights off of the conference calls, get the highlights off of the earnings calls. And then I'll watch a few videos, get recaps from some of the guys I like listening to. And man, that's gonna have to be what we can do for now. I'm sure over time I'll get better and better and learn more and more, but I can't see spending a whole lot more time. I'm trying to learn to work efficiently, using Grok and using guys that have been doing this a long time to run me through and read me through these earnings reports. I'm an expert in cabinets. I'm a service manager, so I'm an expert in talking builders off ledges when they're upset. I'll probably never be an expert in banking, but I'm gonna do all right. So the big dip honorable mention I wanted to talk about was Adobe. It's kind of in this same realm with Salesforce. They were down 6% for the week, down 16% for the month. But they've been getting beat down for a while, so it's hard to get them to move down as fast as some of these other ones move down. But I'm just curious of why we're selling off SaaS. Why is everybody just dumping Salesforce and dumping Adobe? Adobe right now is trading at an 18x forward PE, CRM 24 times forward PE. Folks, that's cheap. That's real cheap for these companies that still have these solid fundamentals. I'm just not buying this narrative that AI is going to blow them out. I work with Adobe at work. I can't imagine our company going away from them. They're integrating AI like crazy. We're getting to see the benefits of it in real time. I just don't see AI being this huge disruptor for big, awesome companies like Salesforce and Adobe. I think it's going to be a tailwind for them. I think it's going to be something they can use to grow and continue this steady, rock steady growth that they've already had. But really, I mean, what do I know? Jeremy's buying the software companies. Joseph's selling. He just sold Salesforce off, he said. They're both around 7% of my portfolio, so I'm a little hesitant to add more now and build them up even higher, but I'm definitely not selling them. I'm going to hold them, and once their position in the portfolio decreases a little bit, I'll be buying again, I'm pretty sure, before the year's over. One other stock, it wasn't on the big dips this week. I think it was on the big dips last week, but they did report earnings. So, is Elf Beauty, ELF. Now, y'all know this is one that I love. Trailer Park loves Elf. It's nice, cheap, quality makeup. But earnings per share, I mean, good Lord, 72% beat on EPS. Revenue up 38%. And y'all, they just had their 28th straight quarter of sales increases. That's awesome. I mean, that's impressive. So you got somebody, they're growing earnings per share 72%, the revenue's up 38% year over year, and they've just booked their 28th straight quarter of sales increases. They've got the Rode Sephora, they had a big debut in the Sephora UK, and apparently it just took off like crazy. They're still doing their expansion into all the Dollar General stores with the Elf brand. I mean, this growth story is still firmly intact. I don't see any issues with this stock going forward. Well, I think that covers it for this week. We went over a lot. It's good to be back outside in the sun. I hope the neighbors weren't too loud in the background. It makes me smile to see the kids out playing, so I hope it didn't bother you too much. I appreciate y'all being here. Let's see you next week here at the trailer park.